All right, so today I'm going to go over session volume, the indicator, and the tool. So if we get this back, so you might see it on my charts. I have, let me just put it on this thing. And a lot of people think it's just used to show where the most volume is. I'm going to show you how I use it as like a confluence um, based on pretty much where the most volume is and where the bank's key levels are to where they take profits, and how we can use it with our fibs and stuff like that to like get those sniper entries on those wicks, which you probably see a lot of people getting. So if we actually go over it now, you can see like this week what we had. I'll quickly go over how to draw it. So personally, I'd say draw it from, so you had this imbalance candle here and price is coming up. So if we actually go back here now, and I can show you what I do. So you have the imbalance candle that starts here, and then you have the high. So what I do is draw it from the bottom here to the high. So like that, or you could do it from this previous candle here. Pretty much lines up the same anyway. So as you see in this consolidation area, that is where the most volume is. So if we're using this with our fib to look for entries, what we can do is find another imbalance candle, which is around this area here. So we've got one perfectly here. And if we go forward, you can see if we draw the fib on here going across, price will come back and test this level, as you see there. And it might test it again. There we go. And where was that? Perfectly in line with this session volume here. Tapped in, tapped again. You know, we have 1, 2, 3 wicks on the fib. And that's where we could have got, you know, the entry, because like in the previous year, we only had that one confluence. You know, we had the imbalance filled, let's say 70, 60%, and then you were shorting. Whereas if you've got this as well, so this whole area up to here, this push up, this is where the most volume was. And this is where we can look for price to kind of act as a support and resistance. It kind of acts as one, but I wouldn't say it is a support level or a resistance level. I just use it as an extra confluence from the imbalance to the high or the low to come back to, whilst using the fib as well, to then get an entry. If I find another example using a different confluence, so I don't draw them on every single imbalance, you know, like this one here. If we draw it from this one down to the low, you know, it's just this consolidation here, literally had no volume, and price hardly came up to fill the imbalance candle. So if you were looking for, you know, long positions, these big candles are where you'd look to target. You know, you had these little ones here, which you could target short term, but these big ones are where you really want to target, because that's where price has moved so quick and still hasn't come back to fill it. That's where we're looking to target. So this one here, we wouldn't have used that at all, because, you know, see how flat price is compared to when we have moves like this. If we go back here as well, same thing again, as you see the imbalance here where we started it, right down to the low, the lowest point of this wick. It doesn't really matter where you draw it, because it just goes to the same point anyway. But what did price do? It acted as this support area, or you could say liquidity area, because you've got wicks. You know, you've got a manipulation to take all this liquidity here. So it's kind of like when retail traders say they've been stop hunted and the banks have manipulated price to stop them out. That's literally just the banks grabbing liquidity. I think I went over this in the last one as well, where they get their clients in at a lower price to then push it up. As you see here, we had this big push up, and then they take their profits at this previous liquidity here. So if we go back, yeah. So this previous liquidity here is where they took their profits, and then price melted down again. So as you see, the session volume acted as a very, very nice support or liquidity zone, which you could have traded off. I don't know why I just did that, but I'd only enter it if you have more than one confluence. So obviously, I wouldn't just see this and see prices rejecting this level and then start buying. I'd wait for a fib rejection. You could have an order block in that area as well. I think there's an example of that over here. Yeah, this is perfect here. So what we have is, I'll just remove this and explain why I did it. So we had this big imbalance candle, price created a low. So what we're going to do, we could draw it from imbalance to the low. And what has it done? Wicks into it, and it even had trouble breaking above here. And if we draw this across to make it a bit clearer, so you have that level there, which is, let's change the color of that one. So that's the session volume from this area here. And they can act as support and resistance sort of areas in the future as well. So price could come back, as you see, lines up perfectly with this one back here. This is the 20th of July. This is the 30th of July, but they pretty much line up kind of in the exact same area. So we know that's a key volume area where price is struggling to break above or below. And how you could have traded this. So we have, let's just change the color of this.
Yeah, 1 minute.
There we go. So you have an order block here. So this push up before the move down, grab liquidity from this area here. If you go on the lower time frames, you've probably got a lot of liquidity in this area. It also came back to fill partials of this imbalance. So if we add maybe 38 or the 26, if we look, yep, to the T, came down. So you could have even caught that short there. But what we're looking for is catching these shorts here. And so we drag this order block across. And then if you want to get an even better entry, you could either have drawn what we learned last time, the fib across here. And, let's just change this. There we go. This one would have nearly came into the fib. So you might have missed it on this one. Then price came back into the level, tapped the fib. Then we had these taps here. Also, if you're refining it, you have another order block here. So prices come into this order block. It's created another order block in the previous order block, which we came, mitigated this, tap of the fib, and this is where you get your entry. So where would you put your stops? Usually I say put your stops above the imbalance candle, but obviously you don't want to put your stops right above this imbalance candle, because if you're wrong on this little move here down, then you could just price will come up, retest, and then you could catch the buys. So that's why this is a setup where you could have quite tight stops. I usually aim for 30 pips, which you could have got away with, but I would have put it just above that imbalance candle there. And I think I actually entered this. I was targeting this low here, which obviously didn't get hit, but the reason why I was targeting that, it was the London low from the previous day, and price usually comes to fill these areas, especially the wicks, when it creates a big wick like this in London session, and then it'll fill the area and then carry on going. But that will be on the next Zoom where I'll go over the highs and lows and how to trade from them. But you see this example here, we have order blocks. We have the session volume acting as a barrier for price. And we also have the fib and a scaling on the order block. And, let's say you took your profit down here, you would have got a nice 4%. So that was a perfect example of how you can use it with other confluences and how it just lines up perfectly with pretty much different confluences. And same thing here, you have the session volume. And like I said, it doesn't have to reject it right in this area. Like even this one, this was 3 days later, it was rejecting it. And then 10 days later, still rejecting it. As you see this one, we broke above it. What did price do? Came back to fill this level. You might have been able to get a fib entry on this, kind of, but I probably wouldn't have entered on that one. But as you see again, price came down, came back, and we established that that was one of the fib levels, filling the imbalance, but it was also in line with the previous session volume. So we had from this imbalance to this low, came into, rejected down. So you could have got an entry on this one as well. We had the session volume, we had the fib level, and then you could have caught the shorts down, and then you could have caught the shorts here as well. So there's two opportunities within, 5 days. And say you're trading a funded account, you only need 1 or 2 trades per week. You probably see in the Discord, I don't really post many charts because I don't take many trades. You literally only need 2, 3 trades per week max. As long as you're getting those good risk to reward setups, it doesn't really matter. Same thing here again, the imbalance to the high. What did price do? Obviously, this wasn't actually there for this. So that's when price came back down. And where did it come back into? Came back into this area, and it acted as a reversal point. If we look here as well, if you draw the fib on this whole, technically this whole area is an imbalance on a higher time frame. And what I normally do is, I think I'd said it in the last one, the fib doesn't have to be tested straight away. So this imbalance, as long as it's not been filled, it can still act as a reversal for the fib levels. So if we actually put this on here, you see in line with the top of the imbalance candle, draw it across this whole week, you could have got entry here, entry here, entry here, entry here of these levels. So, you can use this as a target, because I know a lot of people like to target the 50% of the imbalance. And let's just say you put the 50% on here as well. You could target this so-called golden zone. And as you see, when price comes into this level, from these shorts, if we keep drawing it across, where the price come down to this golden zone and then reverse, and price came below. And remember, I said if it goes below, it's still valid. It can come and test it again. Came up, tested it again, wicked down because this was at the FOMC press conference, so that's why it did have a bit of volatility here. But price came down, wicked into it, and went up, and that's when we had that big push up. So if you're using it based on, if you're using the session volume based on just trading solely off that, then you might lose a few trades. But if you're using it with the fib, this one here, you could have taken profit down here. You would have got a re-entry up here or up here based on this, the order block, the fib level, where they just all line up perfectly. And that's when you've got a good trade, when all your different confluences line up perfectly, and not just entering off one fib tab. Again, here, you see the imbalance. If we draw it from the imbalance at the top to the low, you could draw it down there or wherever. Where the price come back to test, tapped in, tapped in, tapped in. And instead of just drawing a line like that, you can see, it did have some accuracy. As you see, it did work all along here as well. I like to draw it as a little zone, because these sort of areas, it's never really one exact area, unless you're trading like 1800 psychological levels, 1900, 1825, 1850. Unless you're trading those sort of areas where you can literally get taps perfectly into those areas, it's acting as a zone. So the volume isn't the most just in this one tiny bit here. As you see from these bars, this area here has got the most volume. So you don't want to be missing a trade because it just misses your line that you've got drawn out. So that's why I had that zone instead of just one line. And if we draw it across, where did it also line up with? The 70% on the fib. So this session volume from the 6th of July is still acting as this so-called support area on the 28th of July. And even down here, where did price create that order block? It tapped into this area from back here and came up, created the order block just before NFP, and then boom. So, you know, these areas obviously happen all the time on any pair, not just gold. If we look on, let's look on US 30. So you see here, what do we have? Price came into it. Where does it line up with again? So there's obviously a lot of volume in this area here. So we've got two session volumes lining up again with each other. If we have it like that, draw it across, price tapped into, reversed. And if we have it based off this one down here, where did price tap into, reversed. So these levels acting as like a dynamic support and resistance. It's kind of like how people use the moving averages. They might have a moving average on their chart to maybe indicate whether price is going to continue trading above that level or below it. And, you know, if we have a lot of rejections of this level, then we usually see price continue to the upside, as you've probably seen. You could use that free tap as well, which we use on the fib. Obviously, that just depends on how you personally trade. We had a good example here as well. We draw the fib on here. You could, but price, yeah. Session volume, box it off, draw it across. What happened? Came in, created, could say an order block inside this order block, and then came back, tested it. You could zoom in on this tiny imbalance and draw a little fib, which was perfect. And then we did melt down. So we had session volume, imbalance coming up to fill the imbalance pretty much to the pip. As you can see, that wick filled it to the pip. Dropped down, came back up, tested the fib and the session volume at the same time. And then we did have that drop. So, you know, you had these sort of trades, they don't happen every day. Obviously, they might on the lower time frame, like the 15-minute time frame. You could probably catch these daily intraday trading. But if you want these big moves, like this big move down, this is where you could have used this. And then how would you know where to target? Pardon? Oh, I just asked the question. So where would you have targeted? You could have drawn a fib on this imbalance candle here. And like I said before, this golden zone does act as a nice target area. So this area in here can be used for targets. And if you ever see this on my charts about the fib, that's because I've removed the fib to maybe post on my Instagram or something. But this rectangle randomly is where the golden zone is on the fib. And that's where you could have targeted. You know, here, you could have had really tight stops above this imbalance here. This imbalance had been filled. This imbalance had hit the 70%. You could have had stops above. You've targeted this golden zone here, and you've got a 1 to 10. So this was in, you know, this was in less than a day. Your target's hit 10%. That's more than most traders make in a month. You've made that in one trade just for waiting for that perfect setup. You know, you could have got an entry here on this imbalance fill, or you could have waited further confirmations on the session volume, the order block, the fib, the imbalance fill. You've got all of them perfectly lining up, and that's where you get these big trades. And you even could have bought off here based off what we learned in the previous Zoom. 1, 2, 3, you know, you've got your free taps, stops. You know, you could have placed some fairly big below that imbalance. Could have gone a bit riskier below the fib, below the golden zone, and you could have targeted this imbalance here, which hasn't fully been filled. Or you could have targeted, actually, yeah, that's probably where you would have targeted, because we were at all-time highs at this point. Or you literally could have targeted the liquidity up here. So as you see, there's liquidity here, wicks. So what did price do? Let's say we're targeting now. You know, you've just hit the TP on the 10%. You've entered buys and you've caught another 9%. You know, 19%, 2 days trading, and then you can be done for the month, done for the week, or you can maybe catch a few more. But this is why price grabbed this here. So obviously we have all these wicks here. You can see it better now. There we go. So what did price do? It grabbed the liquidity and you see this close below, price close below. This is, if we zoom out a bit, there we go. You see, this is technically a retail support resistance, even retail's resistance area. So when they see that price has rejected the resistance and it's closed technically below the resistance level, they're looking to short here. I know it sounds stupid, but people actually trade off of this sort of stuff. So they're looking like this. They're looking to target the lows down here. And, they've just been absolutely smacked. Prices grab the liquidity and then it drops. And what did it do? Came back and then we've got that move up. And this zone here was a 4-hour order block. So price came down, 4-hour order block here, tapped into it, 1, 2, 3, and you've got the move up. You could have caught the shorts here from these two imbalanced candles. You could have had 1, 2, 3 shorts, done. And then I don't know if anyone trades US30 here, but at like 1:30, 2 o'clock, this is when you get all the wicks on US30, and that's when it usually makes its big move. As you see here, 2 o'clock. As you see here, 2 o'clock, 2 o'clock. So I say if you're trading US30, definitely wait for that time, or you could even look and get in a position before then. And if the analysis is right, obviously you'll be in a lot of profit. But that's definitely what I do on US30. If we look on gold, oh yeah, I think someone asked about gold fibs, where I drew the fib on gold, and I'll just go over that now. So this one here, the one on the left, I drew this on the 4-hour because as it was on the Sunday open, I knew that price, could have been manipulated a lot, because I think, I don't know if anyone else had this, but on my broker, price was literally frozen on gold. Like you literally couldn't even trade it. If you had positions open, you couldn't even close them because it was moving so quick. So wicks are usually manipulation anyway. So what I did was I drew the fib on this 4-hour body to body always. I drew that across, and then when price came up to this level on the 1-hour, this is where I actually sold. And where would your stop loss be? Stop loss could have been just above there, but it is quite massive because you're trading on a higher time frames on this one. You probably could have scaled down a little bit, and this is when you could have had it, above this imbalance here, just above there. Not the greatest setup, but sometimes you just have to deal with that bigger stop loss. But you could have had it above this fib level here. And if we look, remember I said aim for a 30 pip stop. If you entered after that first tap, you wouldn't have been stopped out with a 30 pip stop loss. That's why I use it. It's a nice level to take your profits at. And, you could have targeted any of these imbalance candles, really. This imbalance here. I wouldn't have targeted this one down here. Now, my reason is, if you look, price has already filled 50% of this imbalance. So that's a sign that we could either come down, test to 50% again, or this imbalance has already been filled. As you see on the higher time frames, this was literally just a wick. That's because price was moving so quick. But that's why I didn't target right down here, down to this imbalance here. I actually closed, I think, 50% of this one here. If we draw that across, yeah, it almost came down to 50%. And then today we did actually have that perfect reversal of this area. So that's why I wasn't targeting all the way down here. I was only targeting this area, but still that's an 1 to 8 risk to reward. That's past your funding talent in one trade. So, you wait for these high probability setups and you're sorted with trading. There's no point trading every single day. I don't usually trade Mondays because say the market gaps, what does it have to do? It has to come back and fill that gap. And sometimes there can be a lot of volatility and there's just no point trading like that. I usually wait for Tuesday, Wednesday, Thursday, pretty good trading days. Wednesday's not usually the best. I found Tuesday and Thursday is usually the best days for trading, but especially with gold. And Friday, at the start of the year, I found Friday was my best trading day. New York Open on Friday always used to make the big moves. But now I think mainly Tuesday and Thursday are my trading days. There's no point adding in looking at the charts for hours and hours each day because it's just not needed. Once you're in your trade, you got your stop loss set, you got your take profit set, you're risk managing, you know how much you're going to lose if you hit your stop loss, you know how much you're going to win if you take profit. Why do you need to watch the charts? That's when, especially if some of you work, it's best to start swing trading. So looking at these trades on the 4 hour, and you could have caught this one here on the 4 hour. And a lot of these moves on gold are actually based on the higher time frames. As you see here, you could have got in on any of these wicks, stops below, and you would have been sorted. Just get into the habit of not looking at the MT4 every 5 minutes, like every 20 minutes, just to check the trade, what it's doing. Because say you see a little bit of drawdown, you'll think, oh, my analysis is wrong. I've got to get out of this now. And then you can start to force trades because maybe you lose the trade. You'll think, oh, I need to make my profit back quickly because I don't want to see negative on my MT4. So then you'll start over trading. So just have a certain amount of trades you want to place per week and never go over that unless obviously you have the perfect opportunity. Like one like this, where you've had a lot of different confluences. And, even this level where gold came back to, it wasn't just a random level where price came back. Firstly, it was the fib level, which we know that 70%, 61% acts to perfection when we have these reversals. So if I draw that back on again, like that, there we go. So it's 0.7, 70% fib projection to perfection. If we actually go back, you can see we had a double bottom created here, reversal. And as you see, tweezer tops as well. We go back, acted as a technically resistance area. You got it again here. So prices often created these imbalanced candles, came back to this exact area and then dropped. Came up to this area, 4 taps, drop. So obviously a lot of liquidity is created at this area. Price broke above. And what did it do? It came back to test it. If we draw a fib on this, where did it test? 50% of this imbalanced candle. And then it went to the upside. Usually when you have these sort of levels like this liquidity, price always has to come back to grab the liquidity, or you could say mitigate the liquidity. I'll find another example of when it does this. We go down to 1 hour. I usually look for on the 1 hour. You can look on higher, but I don't think it's really needed. All right, so perfect here. Let's see if we can look at it on the lower one. All right, this will do. So you see all these wicks here. You could say it is a resistance, but a resistance is literally, support and resistance is literally supply and demand. And what is supply and demand? Just liquidity in that area where orders are created. So as you see, you have this liquidity, you have all these wicks here. And what does price have to do when there's liquidity? It has to grab it. And I explained in the last Zoom, if you've seen it, why do they grab this liquidity? Because there's all these stop losses above this level. And what do? They come up, smack the stop losses and get their clients in at a higher price for when they short it back down. They make the most profit for their client. So they want to come back to the banks to make even more money because they use their own money to push price above the liquidity, above the so-called resistance zone, to then drop price a lot lower. And they do this just by pumping loads of money in of their own to then get their clients in. And then as you see, tested the imbalance again, filled the imbalance, and then we dropped. And the same thing happened again. What did it do? It came back and tested the liquidity on the so-called support liquidity down here. Again, down, tapped up, drop. And it just happens to perfection pretty much most of the time. And then we did have this big NFP drop afterwards. But when you have a drop like this, I don't know if I mentioned it in the imbalance Zoom, price doesn't always have to retrace instantly. especially when it's based on like a news event like NFP, when the dollar was so strong. Um, it doesn't always fill it instantly. Like you see here, price came down, and that took, you know, nine hours to fill this one. But that was a lot of manipulation going on there. But this one could take, you know, a few weeks to fill, could take a few months. There's a good example on US 30 of an imbalance that got filled. I think it was like a few like years later. Price came back, tapped to perfection into the imbalance from a few years prior, and then price made its move to the upside. So always watch out for these imbalance areas and where the session volume is at, because obviously that's where the most orders are. And if you can't be bothered to draw it on each time, what you can do is go up to indicators and type in session volume HD, and you can just mess around with the settings and it puts it on like this. The issue is with this, you can't choose where you want to draw it from, and it does move when you zoom in and out. As you see, it adjusts itself, and it's just not as accurate in my opinion. But you know, you still have certain zones, as you see this one here from the previous days acted as a support into the next day. But I'd personally trade it as this one here, the fixed range volume profile. And also you can use this one without TradingView Pro. And I'm pretty sure the indicator you have to buy the TradingView for it, but I'm not too sure on that one. But that's pretty much all I have to say on session volumes. Does anyone have any questions on that based on what we looked at today? Okay. Does anyone have any pairs you want me to show you it on that you trade? Or I don't know if you will trade gold or not. What do you mean, a breakdown of a buy and a sell? Do you mean an example of both? All right, imbalance. Okay. So breakdown. Okay. So let's say price was back here. Wait, let me see. Okay. What does price have to do? You know, it has to come back, fill this imbalance area before we carry on to the downside. Because imbalance is literally where price has moved so quick, hasn't allowed people to get into the markets. And a lot of people use it as a fair value gap. So you'll see a lot of people trade it the previous wick to the next wick, like this area here. Or you could use it as the whole candle, or technically this whole move down is the imbalance. But I like to draw it from the body to the body on the fib. But you know, if you're using this fair value gap, you could have caught this short here, tapped into it perfect and down. But I'll go over that later because I don't want to teach a zoom on each bit at a time. So then it's less complicated for the new people that join. So what I do is, if I add 0 and 1 so you can see this clearer where I've drawn it. There you go. So you can see there, you got it from the top to the bottom, not from any wicks. You see a lot of people, they draw it from up here right to down here, and then they have this massive zone where price could tap into. I don't like any of that. I have this one zone here, and if we look, where did price tap into perfectly? 1, 2 taps into this area, this golden zone. Let's just remove this and just draw this zone out. So you have this golden zone where price comes and tests. Then what do? Price came down, and you know, you would have used this zone as a target. And if you're entering off of this, you probably could have scaled down for an entry. Yeah, you probably would have entered here. Stop loss, where would you put it? You could either put it above this imbalance here for about 40 pips. You could have gone for tight entries above this golden zone fib levels here, or you could have gone for a safe 30 pips like that. And where could you have targeted? You could have targeted this imbalance fill here. So the imbalance it created on this move up then has to be filled. As you see, filled to perfection. And what did it create? Created a nice bit of liquidity here. You can't really see that. Let me just change the color. It's a nice bit of liquidity here, which then got grabbed and then went to the upside. So you could have seen this as an opportunity to get out of the trade when you've seen the liquidity has been grabbed, the imbalance has been filled, and then price has gone to the upside. And also something else is happening here, which we'll go over later, called the QML, which I'll go over in the next Zoom, which is a nice way of getting reversal entries, which I'll obviously go over. But there's a sell example of where you could have used the imbalance, the fib, to enter. Let me see if I can find a buy one. Thing is, it's caused me a downtrend for a while. I remember where there's a good one. It's back here, yeah. All right, so where was that there? All right, so this area here, you have this imbalance, and this move down was a liquidity grab. So you have all this liquidity here. You know, best way to identify liquidity is just think support and resistance areas where there's loads of wicks. So that's technically liquidity, and price usually has to manipulate below, so-called stop hunts, retail stop hunts, and then price moves to the upside. So we have that there. So price has to grab the liquidity, and then we're obviously looking for buys. And the reason we're looking for buys, you know, from this area down here, we've been in this uptrend. So we're obviously going to continue looking for price to continue to the upside. If price is going up, we're going to look for buys. If price like this is going down, we're going to be looking for sells. If we draw the fib now, the fib is basically what I use for entries. So you have the other confluences, and then you just use the fib to find your entry point on these wicks. So first move down, came, tapped the 50%, created this tweezer bottom here, could have got an entry. I only wait for the 61 or 70. So I would have been waiting for back here. So we go down now. You can see price making a push down. There we go. And then boom. So on the hour, if you're waiting for price to reject, you would have had this nice big push up. Lower time frames, you had wick in. You could just enter on one wick, but I usually like to have another confluence with that. And you could have entered off that there. I used to place sell limits or buy limits at these areas, which worked a bit on gold. But you got to be careful around the time you place them, because they could get hit on like a New York Open or by a news event that you haven't seen. So that's why I usually wait and then maybe set an alert. So what I do is I set an alert here, and then wait for price to come down. That also means I don't have to look at the charts all day, because I had that alert there ready for when price comes down. And would have put it on the 61. So when price began rejecting the 61, you had to look for an entry. You could have had 50 pip stops. You could go for the 30 pips, which I always say to do, which, as you see, worked to perfection. And targets up here. So reason for this target, we had this order block here. So the last bullish candle before the bearish move down. And also we did have this imbalance, which hasn't been filled yet. So that's why we're targeting this area. If we look, price came up, came down, let's test it again, and then boom, tapped to the pip, and then we reversed. So that's a buy and sell example of how you could have used it. This week, if I'm entering any trades, I will send them in the charts tab on the Discord, so I can show you an example of this. I'll mark it all out so you can see it like this, just so you can see live how I'm looking at the charts, and then you can go and look. Maybe if it fits your analysis, maybe enter, or if not, ask questions. Maybe why I was entering there, stuff like that. That's what we're meant to do. Just ask as many questions as you can in the Discord group. So if anyone has any questions, then just ask them now. But that is how I pretty much use. At the start, I just went over session volume, and then how you can use it with other complements, as you see, to perfection. Hope you enjoyed, and I will see you in the next Zoom, which will either be the end of this week or again next Tuesday. But I'll keep you updated in the Discord group. So yeah, I'll see you guys in a bit.